Hello everyone, welcome back to All Financial Discussion channel. For this video will be a series of discussion. Okay, so this series of discussion, I will discuss how can we actually tell if this stock is actually still a good buy. Okay, so there are various indicators. For this video, I'm going to use the price to earning, okay, which is also known as the PE ratio, to explain how to tell whether this stock is a good buy. I will use example to illustrate how to determine this. And also, I'm going to explain what is actually a forward PE ratio, which can be also another criteria for us to determine if the stock is really a good buy. Okay, so basically all this will be the objective of this video. Before I continue, guys, I would like to urge you guys to help me by like this video. Guys, just give me a few seconds. Help me press the like button now. For those who are new to this channel, and if you want to encourage me, please consider to subscribe to this channel and turn on your notification bell. Once again, thank you so much for strong support. A quick disclaimer, this is not a financial advice. Please conduct your own independent research and consult a professional if needed. Never invest more than you're willing to lose. With this, we are ready to kickstart today's discussion. Let me share the myth of the good stock buy. Okay, for example, we have this stock, Coca-Cola. Okay, so currently this stock, Coca-Cola, is having the price of 70.51. Okay, so this amount probably you can buy a new pair of jeans. Another stock, okay, basically is Warren Buffett Company, okay, which is Berkshire Hathaway. Okay, so this so-called Warren Buffett company, okay, currently the share price is 748K. Okay, so with this amount, you probably can buy a mansion. Okay, so which is actually a good stock buy. Does it mean that the lower the price, does it mean that it's actually a good stock buy as compared to this company, Berkshire Hathaway companies, which is actually a good buy? Okay, so basically we need to understand this. Okay, so this is actually what according to Warren Buffett. Okay, so basically price is what you pay, value is what you get. Okay, so price is very easy for us to find out. However, it is always very challenged, okay, to understand the value. For example, okay, if we want to take this example, which is Coca-Cola, okay, stocks. Okay, so this is actually the price. Okay, so the price is easily obtained. However, okay, if we want to know the value of this Coca-Cola, then we need to have some indicator to understand this. So let's take a close look on this PE ratio to understand, to determine whether this Coca-Cola is still considered a good stock buy. Okay, but you can actually always apply to another company. But for this video, I will just use this Coca-Cola to actually determine whether this is actually a good stock buy. How to tell whether this stock is still a good buy? There are in fact many indicators. So basically, I will have this series of discussion to discuss whether this particular stock is still a good buy. Okay, so the first so-called indicator will be the valuation. Okay, so this valuation will let us know whether the price is reasonable or not. So under this valuation, you can see that we have this price to earning ratio, price to earning growth ratio, price to free cash flow. Basically, this is under the valuation. And also beside valuation, we can also have another indicator, which is the financial health and also the stability. Again, there are various indicators to tell us whether if this stock is still a good buy. Beside this financial health and stability, we also have the profitability and also the growth aspect. But for this video, I mainly will concentrate on the price to earning. Okay, so what is actually the price to earning ratio? This simply, for example, you can actually compare the current company PE versus the historical average, which means that compare against his average. Okay, based on the number, you will be able to tell whether the stock is still a good buy. And also, there's another way to compare this price to earning ratio. It actually compare against his peer. Okay, so based on the data against his peer, again from there, you will be able to tell whether this stock is still a good buy. Let me quickly explain what is price to earnings ratio. Okay, so this PE ratio actually show how much investor are willingly to invest in order to receive $1 of a company earning. Okay, so basically this is actually a quick definition of PE ratio. How to compute the PE ratio is shown over here. Okay, from here you can see that it's simply the stock price, okay, over the earning per share. Okay, so basically this will give us the PE ratio. Now you probably will ask whether we want this number to be as big as possible or as small as possible. Okay, so basically the answer is actually it depends. Okay, so before I come in depth discussion on this PE ratio, we want it to be big or small. Let me do a quick recall. Okay, so on my previous discussion, I have discussed what is actually a value stock, what is actually a growth stock. A value stock simply has a dividend, okay, and the dividend can be a potential passive income. As for the growth stock, basically the share price is expected to grow much, much faster as compared to the value stock. Okay, so again, let me come back to the price to earning ratio. Okay, so I'm going to answer whether we want this number to be as big as possible or as small as possible. So like I mentioned, it actually depends. For example, okay, when we actually has a high PE, okay, so what does this actually indicate? For high PE, it actually suggests, okay, the future growth is actually overvalued, okay, for the value stock. Okay, for the value stock, which means that it's actually no good if this PE ratio is considered high. But for the growth stock, okay, basically will be high potential. For the growth stock, we actually want to have the high PE because, okay, from this equation, you can see that for growth stock, the share price is getting higher and higher, which is desired. But for the value stock, okay, we actually want to have more earning per share. So basically from here, you can see that we want this number to become as big as possible. So this number will become as small as possible for the value stock. So basically, in short, this is actually depend whether you want to invest into a growth stock or a value stock. And basically, this is the reason why. Okay, so let me quickly re-explain this again. So for this high PE, okay, which means that this number will be big. Okay, for the value stock will be overvalue. But for the growth stock, this will have a high potential. So on the other hand, okay, basically when we actually has this low PE, okay, which means that we have a small PE, okay, so which means that for value is actually undervalued, which is desired. But for growth stock, okay, if we are going to have this low PE, which means that we are going to have a lower growth, which is undesired. Okay, so like I mentioned, it's basically depend on whether you invest into a growth stock or a value stock. Based on that, you will actually want to have a high or low PE accordingly. Okay, how to use it? Okay, so basically the comparison, how can we actually make use of this PE ratio to determine whether this stock is still a good buy or a bad buy? Okay, so for example, okay, you can actually use this PE, okay, ratio of the company that you want to invest as compared to his peer based on the number. Okay, for example, let's say if this is actually a value stock, okay, based on the lower the PE ratio will be more ideal. And if let's say the company that you're going to invest has a lower PE ratio, which is desired. So this is what I mean. You can actually compare against the peer. If not, you can also compare against the history value of the PE to determine whether the company is still worth buying in terms of the stock. Okay, so this is what I have explained. Okay, so I do not want to re-explain this. So again, whether it is low PE or high PE actually depend on whether you want to invest into the growth stock or the value stock. Okay, one thing to take note is basically if let's say the company do not have any earnings, which means that the company actually will loss. So once the company has lost, which means that they actually don't have this PE ratio. This is earning. Okay, so basically the earning is lost. So there is no earning. So basically for any company that is with loss without any profit, okay, we don't have any so-called PE ratio. Okay, guys, before I continue, this is very important for me. I'd like to urge you guys to help me by like this video. Guys, just give me a few seconds. Help me press the like button now. For those who are new to this channel, please consider to subscribe and turn on your notification bell. Once again, thank you so much for strong support. Before I give you an example how to determine whether the stock is a good buy, okay, so let me give you another example, okay, a life decision, okay, whether you want to go to university or not. For example, okay, you need to do some form of research. For example, if you go to university, the school cost fee is around 100K. Okay, so now you need to do some comparison. Okay, you need to compare for those who go to university, how much they earn, and also compare those who never go to university, how much they actually earn. And basically, you need to compare the difference. For example, you compare the difference is actually 30K per year. Okay, the difference between someone attend the university and against those who never attend the university. So from here, you can easily compute the ROI. Okay, so from here, you can see that 3.33 years, you will be able to recover back the original so-called school fees that you actually invest. So based on this data, you know that it is definitely worthwhile to go to university because the ROI is pretty short. So now let me give you some illustration. So now again, we shift back to the stock. Okay, so the stock is not so direct. Okay, giving back the same example, Coca-Cola. Okay, so again, now currently the share price of Coca-Cola is around $70. And based on dividend, okay, which is 2.89%, okay, which if you compute, okay, this roughly give you about $2 per share. And if you again compute against the ROI, okay, so basically for this investment, you need 35 years to get back the original fees that you actually invest. Whether this is worthwhile to invest is not that easy anymore. But based over here, you can see that you probably will take a longer time to recover back the original cost of the so-called the fee that you actually invest. But for shares, this is not the correct way to compute. The correct way to determine whether the stock is still a good buy is based on price to earning ratio. Okay, so keep this in mind. For example, okay, I'm going to use this company, Coca-Cola, again for the illustration. If you still remember what we have discussed previously, Coca-Cola is considered a value stock because they actually give out a very attractive dividend. So therefore, for Coca-Cola, it's actually considered a value stock. And if you still able to recall what we had discussed earlier on, for value stock, we want the PE ratio to be as small as possible. A smaller PE ratio indicates simply that they actually give up more dividends. Okay, so let's quickly study whether this company, Coca-Cola, is still a good buy. Okay, so where we are currently now is basically from here, you can see that the PE ratio is 23.27. And if you compare against the history, okay, on the average is 36.11. And if you still remember, for value stock like Coca-Cola, we want the PE to be as small as possible. So therefore, now, okay, you can actually conclude that this company, Coca-Cola, is still a good buy because the PE ratio, okay, 23.27 is way smaller than the average of Coca-Cola throughout the year. So therefore, from here, I can probably say that Coca-Cola is still a good buy based on price to earning ratio. Okay, again, there are more indicator. Okay, so basically you can compare on various PE against the 1 year, against the 3 year, against the 5 year, and against 10 year and 15 year. And keep this in mind, we want the price to earning to be as small as possible. So from here, you can see that where we are currently, they are actually at the lowest point. So basically from here, this is actually a strong indicator that this share, Coca-Cola, is still considered a good buy when you actually compare against all the various history that actually indicate this on the price to earning ratio. Okay, so another illustration, okay, basically let's compare against 3 year. Anything that is below this 3 year average is actually considered a good buy. Okay, so this is how we determine based on price to earning ratio. Okay, the last portion that based on price to earning ratio is against the peer. if you still remember, there are actually two ways to determine the price to earning ratio. One is to compare against his history, and another one is to compare against the peer. Okay, so these are all the peer, and from the number you can see that from this Coca-Cola is still considered a small number against the peer. Probably another company, okay, which is having a better PE ratio, okay, because all these are considered a value stock. Okay, so but in general, okay, I can see that this stock, Coca-Cola, is still considered a good buy based on this PE ratio. I will share the link, okay, of the chart, okay, under the description. So guys, if you want to see all these relevant chart, please refer to the link under the description. Next, I want to do a quick conclusion. Whether a big PE ratio is good or bad is actually depend on whether it is a growth stock or a value stock, which I believe that you fully understand now. Okay, next, I'm going to explain what is forward PE. What we have discussed earlier on based on PE ratio is basically indicative currently. Okay, what is actually forward PE? Okay, forward PE is basically we are actually looking forward. We predict the PE. Okay, so once we come to predict, we will have various companies that have various so-called prediction on the PE ratio. Okay, so over here you can see that these are all the various companies that actually predict the PE ratio of Coca-Cola. Okay, so basically in short, you can see that based on their prediction, okay, this company Coca-Cola forward PE ratio is actually hover around 21 to 23 as from this early Jan 2026. With this number, they actually strongly indicate that investor expect to pay for future earning. So with this, you can see that in general, this is actually positive future growth. So this is based on what I have illustrated earlier on also, okay, based on price to earning ratio. And again, to ensure, okay, you can also rely on this forward PE. Okay, so basically from here, you can actually so-called have a better understand to determine whether this stock is a good buy or not. Although I have so-called only use this Coca-Cola as an example, but you can easily duplicate what I have done for this video on another kind of stock to determine whether this stock is still considered a good buy or not. With this, okay, I'd like to end my discussion. Please help me to like this video and subscribe to this channel. Once again, thank you so much for strong support. I hope to see you guys soon. Bye for now. Thank you so much.